Let's try microphone. Yes. Let's try. Can you hear me? Can you guys hear me? Can you guys hear me? Can you hear me? Can you guys hear me at all? Can you guys hear me? How about now? How about now? Okay, I know what it is. Okay. All right. How about now? Do you still hear her whistling?
It's better now.
Okay, cool. All right. So obviously that microphone doesn't work. So I'm gonna wait like a couple minutes just to give people chance to get on. And then I'll start in like five more minutes. So I'm gonna wait like
Oh yeah.
play some music right quick.
How's the standing desk? Overrated. And what if I told you could trade?
Hi there, I'm Jeff Bishop. I'm the co-founder of RagingBull.com. I'm one of the top real money options traders in the entire world. about the time Big Jim saved Nelson from the great storm.
Oh, so familiar. Oh, meter for the beat. Yeah.
All right, y'all. What's going on, man? So appreciate y'all for jumping on, and appreciate K Dot again for getting everybody on again. I just wanted to go over some markups and then go over some of the trades I took today, and just answer any of the questions that you guys have. So I'll just go over everything, and then I'll just unmute everybody, and we can just do a Q&A at the end of the session, and then you can just ask whatever you want. No matter what the question is, it's not a dumb question. It could be anything from lot size to how you enter your trades, how you exit, what broker, anything you got a question about that you wouldn't normally be able to answer on one of the live sessions that people are on that they don't have time to ask you. I could probably answer those questions. So I'm gonna start with going over gold first. And let me turn this down. I'm gonna go over gold first, and I want to go over gold first, even though I didn't take this trade. I gave this trade out to somebody that that was looking to get in the trade during that time. We're looking at the 15 or 30. Hang on 1 second. Yep. Just jump on. Yep. Just jump on. I'm on already. Yep. All right. Sorry about that. So this was a setup I was looking at for gold, and I kind of already boxed it off and zoned it off already, but I'll go ahead and clear it off just to kind of go from there. From the 4 hour, right? We got our zones, right? I use this 4 hour chart to get my zones off of. My top zone right here. We already rejected from this at this point. And then the lower zone right here, I use this little area where we got all these wick rejections, even though it broke from this already. It had broken from this before. I still like where all these wicks were, because the wicks were telling me that it was going to be some rejection there. Do I use fibs? Every now and then I throw fibs on, but you know, that's just if I just want to see where it is currently in the move. But like a lot of times, you know, I'm to the point I don't need the fib so much. I just use it to try to get an idea which way or where it is within the move itself. I'll usually know ahead of time like where it is and how I want to take the trade. So don't really use fibs a lot, but they're good. A lot of people I know trade with fibs. A lot of people are very successful with fibs. I use zone and candle. I use price action in zones, and I trade from zone to zone. Whether I'm taking a trade within the zone or breakout and retest of the trade. So got my at this point, I got my first couple zones. I also adding this lower level as well right here as another target. And now I'm ready to look down at the 1 hour. I'll usually keep this as the I usually keep that as where I want to go as far as how I want my zone. And then I'll just come down and kind of clean it up from the 4 hour and make sure it's where I feel comfortable with trading from. So to me, this looks good as far as the zones go. Not so much calling signals, but this person, I was trying to help him with some stuff that he was looking at. So I told him that he should probably take this trade. So not so much a signal caller, but I just knew that I needed to help somebody, and I did. So this trade kicked off around midnight last night. And what happens at midnight is you have London, not London, but you have Tokyo and you have Sydney session crossing overs, right? So you get a lot of volume from around 9 p.m. to about midnight. On those candles, you get a lot of trading volume on those particular candles because for some reason, Tokyo loves gold. You'll notice that if you go back and look through your charts, you'll see a lot of times you get a spike around that 9 p.m. candle and the midnight candle, sometimes the 10 p.m. candle. But this time, I noticed that it was consolidating near the low of this zone. So I was thinking that we might get a break. So this was my 12 o'clock candle right here. Let me step forward a little bit on this here. Step forward. This is where it was around that time frame. Let me move this over a little bit. This is where the candle, the 12 o'clock candle was. So that kind of told me that that I have a chance to take a sell from this point. And what do you look for to mark up your zones? I look for wick rejections, multiple times where prices turned around and reversed immediately from the area. So like here, we had price come down to this area, even though it shot it past it, it basically came to this little area and rejected and turned around. Same thing right here, came to this same little area and reversed. Same thing for these two candles, came to this area, reversed, same thing. So that confirmed to me that we got a valid zone. We got multiple touches, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. We even count this because it almost touched it. 11, 12, 13, 14, 15, and now this would have made our 16th touch. So this tells me that I have a valid area. And on the opposite, you have on the top side, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18, 19, 20. And when I see wicks at that area, that confirms it even more so, right? We got some breakouts, some fake outs up here. We got a good clean breakout that created another zone up here. This is likely going to create another zone right here and even right here. I would consider this as a nice little zone to trade from as well. But this area more so interesting as well as this area because I got a lot of wicks. When you're near a zone high or a zone low, like we are right now for these trades, we're near a zone low. This is a zone low right here. And because we got a lot of wicks, anytime we get near this zone, this low, that implies that there's new buyers coming into the market. So as we start getting these wicks that shoot and overshoot this zone, that's telling me that there's people that want to send the market back up in the opposite direction from this point. And then the same thing from this area up here. You got a lot of wicks that are shooting back down. So this first wick says now we got some buyers that are trying to push it up. This next candle comes back down and brings in new sellers. This confirms that this level is valid because we got a new bunch of sellers that came in right here and pushed the market back down to hold this zone right here. So that was the reason for, that's how I kind of confirm where I am with as far as my zones go, right? So let me remove this. And so again, on this 12 o'clock candle, I noticed that we were like starting to pierce through this. And it was John. I don't know if he's on the call right now, but John, he asked me, was I gambling because I get into the trades earlier? But no. So sometimes the 15-minute candle is the candle or the time frame people enter on. But because the market moving so fast right now, I even before that, you know, I use the 5-minute charts, you know, because it's moving so fast. You don't need a 15-minute candle at times, you know. So I use that to get into my trades instead of using the 15 minutes sometimes. And if I'm looking at, there's a couple things that I'm looking at if I'm taking that entry, right? So I'll use this area as an example, right? And let me box this off right quick. This area right here, and this is the high of a zone, right? And let me change the color. So this area in particular, right? Oh, that's not gonna work. And let's go green, right? So this area in particular, right? I'm near the high of a zone, right? And if I was gonna trade this, this rejection of this high, there's a couple things I would be trying to look for, right? So I have the high rejection. Once I got to the high, I see this huge bearish candle that pushed it down and then rejected. The next time it got back up there, another huge candle rejection, push it down. Sometimes if I'm trading candles that if I want to trade the break of a high or rejection of a high zone, I use my wicks right here to use those as entries, right? So as it pushed down and swings back up right here, I would get in. And those are sometimes when people are like, why did you get in so early? It's because I saw something like this where I got it rejecting the ceiling, rejecting the resistance area, rejecting the zone, and then I see a push down below it and swing back up to come. So and then I'll enter in this area right here to take the trade on down, and like it'll get me into trades that sometimes people taking the break, I'll already be in because I would have got in right here. Or this is another example right here. Same kind of situation. Let me mark this little area up. Like we got the rejection of this zone right here, right? This this zone, we see that we got price pushing up. And the first candle that I see rejection on, which is this one, a large wick, sometimes I'll enter in up here, or I'll wait till it pushes under this little area and I get the rejection and I enter in on this candle or this kind of candle right here. And then my stop loss would be above the high of this wick or above the high of this level if I got in over here. And if we fast forward, and let me get on to the 5-minute, we fast forward a little bit, right? So where I actually told my friend at this time was to get in when he saw the break here, right? So I use the term ABC setup, right? to describe my break and retest situation. And you have the 0 move, the A move, a B move, and a C move, right? This describes your break and retest, right? Your break would be the 0 to A. Your retest would be A to B. And then the move for the actual retest would be B to C. That's how I would describe my trades when I'm taking a break and retest setup. Same thing on the top side, 0 to A to B, B to C, right? And I kind of, when you think of it like this will kind of give you an idea of where you have your TPs, right? So this area is why I put my A right here, because this is the longest extension within this range right here. Within this range, which is, this range is 106 pips, right? So within this range, I have the opportunity to at least get to this for my 0 to A move right here. So this would have been my TP1 right here from this point, right? And I would have probably put it up just a little bit just to make sure that I'm not all the way at the bottom, but that's my 0 to A move. That's the break. And usually your break is going to be like 30 to 50 pips, right? In this case, this is 47.4 pips. And then my B to C move, I got that from this candle right here. And this one was a little different because, I mean, you could see it going all the way down here, but just to be on the safe side, make sure that I get at least down to near where a likely area where it could come to, I moved it up. So my next TP would have been somewhere within this area. So that's where I would have got that TP from, right? So that gives you your A to B to C move right there, right? And so if we go ahead and fast forward this and let it play out, right? We can go ahead and let it play out. And we see on that candle, we got our move, right? On this candle, we got our move. And I'm gonna show you from a different platform, right? Because this is on TradingView. And I'll show you from my account what it looks like, because my broker gave me a different view of this, right? So as you can see, let me pause it, right? You got your initial break right here. You could enter on this candle, even though it pushed down a little bit, but that's why I enter on a 5 minute, because I have a little opportunity to get in on a candle like this, because if I see this, I probably wouldn't get in on this on the 15 minute, right? And let me show you what this same candle looked like on the 15. You wouldn't have gotten in on the 15 minute, because once it broke, it just broke, right? You see, it just flew through. Unless you had your buy stop set around a buy stop, unless you had a buy stop set right here on the zone to trade in, get in right here, that's the only way you catching this, right? But on the 5 minute, you have an opportunity to get in at this point, because at this point you are it's only down 16. So if it comes up, you know you only have to worry. Nope, not even 16. This is 15. So it'll look different on my broker. So I'll show you where I actually told him to get in at, right? But you could get in at this point once you see the price starts to come back up, and then you hit your TP1 right here. Fast forward a little more. Let's fast forward a little more. It came up, It pushed down and it rejected. We got TP2. Pulled out, came back up. Even though it hit TP1 and 2 on this particular trade, as you'll see, it came back up to our original entry. And if you missed this break right here, you got another opportunity to get back in on around the London session, the London Open. So let me speed this up a little bit. And we got another rejection up here on this candle right here. And, you know, again, once I see that I'm starting to get rejection, here's the first sign right here. All right, this first sign right here, I get another confirmation. This sign right here, new sellers coming into the market, new sellers coming in the market, new sellers coming in the market. This is new sellers coming in the market. Then we're gonna get, as we keep going forward, we're gonna see that we get a very, very bullish, engulfing candle that confirms that there are new sellers coming in, right? So here we got our next candle. Here's that big bullish engulfing candle, right? And on this kind of setup, I'm a little aggressive, right? So if I see this first candle that's rejecting, which is a pin bar right here, this is a pin bar candle near resistance. This pin bar candle near resistance tells me that I can likely take this to the opposite direction. And this pin bar turned this 3 pattern candle into a, what do you call this? A shooting star. So I knew that I could take this on the next candle. So this would have been a situation where it pushed up. I would have put in an order as I'm seeing it push up just below where the open is of this candle, or I would have waited until this candle opened up, put the order right here, and then let it push up. And by doing that, it alleviates the fact that you would have been in drawdown, right? Because if you get in right here, this is only 2.3 pips of drawdown for a move that gave you 63 pips, 63.5 pips, right? And then at worst case, if you put your stop, you're getting stopped out at about just above the wick. You're getting stopped out with only a 13-point loss. So if we look at that and see what the ratio is, right? If we look at the ratio, that is a 4-to-1 trade, right? 4.23 trade. So at worst, my drawdown would have been here. I would have lost these 14 pips, but I'm looking at a trade that would have got me 67 points, right? So, and in this case, the way you would have entered this, if you didn't enter it up here, like the where I would have entered would have been right around here. So my ratio would have been here. I would have looked for here to here. So I would have been trading with a 2.7 to 1. And if I'm looking at the entire move, I'm looking at a 5.0 to 1 risk reward ratio, right? That's what you want to look at when you're looking at trades. And when you get a risk reward ratio like that, then you increase your account balance a lot quicker, because if you are okay with taking this opportunity to get in this trade from the most advantageous point where you see that there's rejection, and if we keep fast forwarding it, we got another opportunity to get in too, right? So it hit TP1, right? If you didn't get out right here on TP1, right, it came back up. Here's that bullish engulfing candle again. It's the sign that we're getting more sellers, right? The same place we entered at, right? The same place we entered the first time, right? Look at it this again, right? If we take that same trade, from here, same entry, my stop loss would have been here above this. My entry would have been here at the base of this candle. And then I'm looking at TP1, still 4-1. This makes this even better. This is 8-1. At worst case, if I'm in drawdown, right? Fast forward it some more. We got a third time when we can get into this trade, right? Which I probably wouldn't recommend it, but you know, the opportunity was there if you took it, you know. Speed it up a little bit. Speed it up a little more. We already hit our TP1. It retraced. Here's that third entry right here. Right over here. This that third entry. This would have left you in a little drawdown right here, because you would have been swinging back and forth into in the profits, out of profits over here. This would have gave you a drawdown, but this would have gave you the move, the full move all the way down, right? This trade helped pay somebody rent today. So as it moved forward, so as far as gold right now, right before, like I kind of stayed out of the market today. I did take a trade on US 30. I did take a trade on US 30. And I'll go over that too. But because I knew that Trump was going to be speaking, I kind of stayed out of the market a little bit. And then when I did get in, I got in early. So I was kind of, I was kind of in and out of the trade. So I didn't really mess with it too much until I knew Trump was done speaking, right? So looking at gold, right? We want to know about gold now. So this was our zone. Now we look on the higher time frame. Let's look at the 4-hour, right? Look at the 4-hour. This area looks pretty juicy right here. This would be my next area that I would trade from, right around here. Because again, what do we got? Wick, this big long wick rejection right here. This long wick rejection. And it adds up to this area right here, right? Let me delete this one just so it look a little better. Long wick rejection, right? So there's our zone, right? So what does it look like? If it breaks below this, we know we can trade to this zone right here, right? On the lower time frame, on the 1 hour, right? Look like it's coming back into the zone. But what happened today, can you do a markup on zone to zone, please? I just did. Yep, that's what this was. So this was my first zone. The zone that I just added came again from the 4-hour. And I got this because of this wick right here, this wick right here, these wicks right here, all this rejection. Again, like my zones come from seeing multiple rejections in the opposite direction. Anytime you see a wick, that wick is confirming that we have a change in direction. I got wicks here. I got wicks here all along this area. I got this one huge wick right here. So for me, I'd be okay with trading from these because I see that anytime it's coming to this area, it's turned around. It's turned around, and each one at a time. I can go through how many touches. It's over 20, 25 touches over here of this zone, right? And most recently, we got this wick rejection. If it came down past this, where would you think my next area would be? somewhere along here, right? Multiple wicks, multiple turnarounds over here, multiple rejections over here, right? Near this area. And then from my lower time frame, where I would take my entries from, off the 1 hour, 15 minute, and the 5, right? So as far as what the actual breakout candles look like, I always get faked out. What are your thoughts on gold and US 30 move in the same direction? They correlate. So gold trades the opposite of the market, right? When in most cases, let me show you something. This website right here, correlation. This website right here, I'm gonna drop the link for you. Will tell you all of the pairs that correlate with each other, and you can even add in some of the ones you want to look at. So you can add in the pairs you want to look at that to see where they correlate against. Let me see what I got. GBP. Let's see. I want to add in gold. You want to add in gold. Where are you, gold? X. Where are you, gold? Anybody see it? Am I overlooking it? I don't know. I see you. Let me add NAS while I'm looking at it. Let's even look at JERD 30. That's a cool pair. Everybody looking at that. USD ZAR, GBP. Let's add you. Let's look at let's look at GCAT. A lot of people like to trade that. GBP NZD. Let me add you. Let's keep GBP USD. Let me see who else we got over here. No, this is JERD 30. I don't know what this is. US 30. There we go, right there. Oh, there's gold. I'm slow. My bad. And let me just add USD. Oh, so I can only add 10. So let me see which one we want to take out. We don't want GCAT. Let's do USD JBP. All right, so we got the ones we want to add. Columns. Okay. I think that's it. Okay, all right, so to understand what we'll look at, right? Looking at the correlation, right? So when you have a negative, the more negative you are, the opposite that it trades again. And the more positive you are, you move in the same direction, basically, right? So our pairs are GBP, NZD, the G pairs, JERD, NAS, NASDAQ, US 30, NAS 100, USD ZAR. So let's see what gold does compared to US 30, right? Gold, US 30 right here. So look at this, right? GBP moves 82% of the time in the same direction as US 30. GBP NZD moves negative 63% of the time against it, right? So if I'm trading US 30 for a buy, I'm likely going to be trading this for a sell. Same thing with this. If I'm trading US 30 for a buy, the JERD 30 is probably a buy as well because it's moved 97.8% of the time, right? And then look at this. This is NASDAQ, right? 99% of the time is going in the same direction. USD JPY, 67% of the time is moving in the same direction. ZAR, 78.4% of the time is moving in the opposite direction. And then we got gold, 63.8% of the time is moving in the opposite direction of US 30. So that tells me that a majority of the time, I can trade against the direction of US 30 if I'm trading gold and vice versa, right? So you can take this and review it, and then you can learn how you want to take a look at this, right? Even if you wanted to look at let's see, I think Bitcoin is on here too, right? Let me see. I think Bitcoin is on here. If not, it's not. Let me look at in this list. Is Bitcoin on here? There's Ripple right there. I thought Bitcoin was on here. Guess not. Nope, guess not. But I think I got another link that does the same thing. Currency. No, I don't have it. If I find it, I'll send it to y'all. Just drop me a link if you want it. But this one is the main one I like to use, right? And so, and then look, you can even check the time frames, right? That's based on a daily time frame, right? Let's look at it on a monthly, right? So on a monthly perspective, right? How does US 30 move opposite gold, right? So for the most part, on a higher time frame, if you're taking a long-term trade, you probably want to move in the same direction, because on a long-term view, it moves in this similar direction overall, So that's kind of why you can trade, you can trade the pairs against each other, right? So if I'm looking at gold, and what happened today with US 30 was, today US 30, President Trump, he mentioned that he was, right before the end of the day, he mentioned that he was going to take the market, and he was going to use for the rest of the year, he was going to take the interest rate down to 0, right? So because he did that, I'm going to assume that we're going to get some buys, right? This is my actual chart that I'm trading from. It's a little more messy, but I know what's going on. So I expect to get a couple of buy opportunities, and we already know that this level is intact. So today, the trade that I took on US 30, I bought from down around in this area here on this 4-hour candle, and I took it up to right around here because I wasn't sure where it was going to go. So let me open up this chart. This will kind of tell you where I entered my trades. So I entered this trade buying at 23,934. I took that up to here, and then I got in another couple of other trades right around here, where I bought again at 24,124, and then another time at 24,163, and just to these areas, because I just wasn't really sure when Trump was going to speak, so I just kind of played it safe, which I hate that I did, because this would have been the swing I wanted to get on right here, which I should have stayed in, because this was the move right here to here, which was, that would have got me like $4,000 or $5,000, but I didn't get an opportunity to take this because I had some conference calls to be on. So you don't want to trade when you're doing other stuff. So, but I still ended up good today. Made like $900 on these couple little trades, which is cool. But for now, I think we're gonna get another look like this. So we got this push down, consolidation right here, swing up, and another push down. So I'm hoping that this level holds right here, and we get consolidation around this area. I don't mind if we get it a couple swings down below this. I'm okay with that, but I'm hoping that what Trump's doing regarding the interest rate gives us the opportunity to get that another buy swing over here. So that's what I'm going to look for. And then if it does that, I'm going to be trading this in this for the buy, and then I'll be trading gold for the sell. So always throws me for a loop, Juicy. Okay, Corey, what tool do you use to find your risk reward ratio? That same tool inside of TradingView. This little tool right here in TradingView, like this gives you the risk reward right here, right? So not this one, this right here. So if you come in here, inside of this little icon, you get long and short positions. If I'm taking a long or short position, right, my wherever I'm entering, this level right here is where I'm gonna enter. And then when I'm looking at my risk reward, this is my risk over here. This is my reward down here. This is the actual risk reward ratio. So it's 3.4 to 1. So this is 3.4 is here. And then my reward would be down here. So 3.4 to 1, right? So it would take 3 of these blocks, 3.4 of these blocks to make this block. Cool. Okay. What does the actual breakout candle look like? I always get faked out. It closes out on the zone, but fakes me out and goes back in. So that's what I was showing you earlier. And let me go to my broker. So a candle like this, right? If I was trading this zone breakout right here, right? This is where you get faked out, when you get a candle that pushed down like this, but the next candle doesn't come back up, right? Because you want to get in a situation like this, like it pushed down, it pushed back up, it pushed down, and it didn't give you a candle to get back in on right here. Let me zoom in. Those breakout candles, it didn't give you that clean break of the zone. It gave you a clean break of the zone, but you never got the candle that came back up to give you an entry. So you want to look for something like this, right? So you see this zone right here, right? And if we were trading
No, but I'll take it and push it. She's just going in for glasses. Oh, okay. So I was gonna say this is disinfectant. Thank you. You too.
So sorry about that. So if I'm trading the breakout of this zone, right? And I'm looking for my ABC setup 0, my ABC setup, right? My A. Right, this would have been my ABC setup, right? Breakout, retest, setup. Look something like this, right? Make this a little smaller. All right, so this is why I was saying earlier, like sometimes I don't use the 15-minute, I'll use a 5-minute, right? Because look at what this zone would have done. Like if I was trading this, I wouldn't have got that entry right here, right? Because it just flew through, right? And it was actually rejecting right here, right? So from the 15-minute, I wouldn't have got it because the markets are moving so fast. So you got to kind of adapt to what's going on, right? So me coming down to the 15-minute, to the 5-minute, gave me this entry right here. So this is my zone, right? It broke out right here. It didn't come back down, but I got the wicks moving down. And to get into this trade, I would have got in on the bottom of this candle right here. if I would have got in. And then I would have used just like the low of this candle to be my stop loss. So if it came back down and if I got in on this candle and I saw this pushing back down, I would have got in on this next candle. And I knew if you take this trade, this is related to news right here. So you got the momentum of the news to help you push through this zone. So you could get in on this, a trade like this by just entering on this one, because this was one of those situations where this was just after Trump was speaking. And that would have confirmed you could have got in right here on this candle. Once you saw this break above, this would have been a close above. This pretty much would have acted as a close above and got in right here and went up from here. Or you could have got in on this candle. But I'm going to try to find a clean break. A clean break is a little easier to spot, right? Yeah, we haven't been getting a lot of clean breaks. Let me look at the higher. Clean break has not happened in a while. So let's look at a different pair maybe. Let's look at you, buddy. Nothing clean. NZDJY. Let's try you. A clean break, right? Okay. I think I see something. So this is my zone. Here, this is the high. Stay low. Yep, I see a perfect break and retest, right? So, okay, we got a couple clean break and retests over here, right? So here's one right here. This candle breaks and close below, right? You enter on the next candle over here, and you got the candle that comes back up, retest, and you get in on this candle. Not so much entering in on this. The only way you get in when you see it break is if you got a buy stop or a sell stop sitting already at the zone, right? So you wait for this candle. With basically what this candle did was, you saw it broke, right? It broke right here, broke this zone. It retested this zone. It actually broke over here, but it retested this zone. And in this case, you had price coming back up into the zone, right? And it broke again right here. But when this candle, the next candle opened up, it started to push up, right? And that's where you get your wick from. It started to push up, and as it's pushing up, it starts to reject and come down. And then you either enter in when you see it reject, or you enter in at the base of the previous candle and just ride it down from there. Another example for a clean break, where was it? I just saw, oh, right here. Let me move this down just a little bit, because so this would be the candle that it broke from right here. So on this candle, it broke, right? And then on this next candle would be the candle you enter from, because it broke it, but it didn't like just fly all the way through. Same concept, right? Let me move this out the way. Same kind of concept that I mentioned before. This candle broke. This one came back up and started closing and rejecting the zone. So you can either enter in immediately as soon as this candle opened, which would have been right here. You would have had a slight drawdown in this case, because it's JPY, you only had like almost 2 pips of drawdown, but you would have got all this move right here, all the way down to here. 54 points off of NJ. That's good for NJ, a 54-point move, because it doesn't move that bad. But this is a clean break and retest. It broke, candle closes below. You either enter in at the base right here, right at the base. Let me change the color of you. Oops. You don't want to open back up, okay. So you enter in at the base, right along this candle, right here. Somewhere around the base of this candle where it opened previously, and then, or you enter in at the top of the wick and you take it down from there. This is like the perfect example of a break and retest right here. So this is the kind of situation you want to look for. But when you get a situation where it pushed down really, really hard, like this candle, you don't enter in on this, right? You don't enter in at the base, because now this what happens when you guys are getting stopped out or getting taken out of profit, right? When you guys are losing, it's because you are entering in too late, right? Why? Whatever. Of course. So like, if this candle was the candle that broke, right? Trying to enter in right here, it's already over. It's already extended too far down. Like at this point, this is probably near where my TP1 would have been, which would have, looking at these other areas, my TP1 would have been right here. So this broke and it already hit TP1. So this is an example of one you don't get on into right here, because if you enter in on the next candle, as soon as you got in near the base, or as soon as you got in near the base, you already in drawdown, because as soon as it opened up, it started pushing back up. Now, if you had to took it the entry a different way and enter in up here, once you start seeing it reject, you would have been okay. That would have been a good entry. That would have been the entry that I would have been looking for if I was still trading this somewhere up here back near the zone, because I've already missed this move. So now I got to wait to get the retest. This is the break. You got to think about a break and a retest trade as 2 different trades. Your break is this initial move down. Then your retest is the move back up to check and see if this zone is valid again. Those are 2 different trades, which you got to handle 2 different ways. Actually, 3 different ways, because if you take the break from the initial break, you got a buy stop or a sell stop already in the zone, right? Your sell stop would have been right here. So you would have caught this move down immediately. But this candle is the reason why I don't really like doing that, putting it down, because this candle, if you had a sell stop in right here, it would have wicked you into this trade and took you all the way back up. Now you down, right? That's why you don't use a buy stop. That's why you look for a market entry and come in right here. And when you see it, you know, you just enter it in and it's going down. And sometimes I don't even do that. You know, I like to wait for this move to come back up and then go down. Or I like to look for something like this, so that way I got a better confirmation that this is a valid break. You know, that's why you guys are getting, you know, losing, because you either entering in once you see it break, and then it's just doing this same move right here and it's wicking off that area because it's not ready to come back down. And once you see that it's done this, you're like, oh man, I'm getting out of the trade. I'm losing, I'm down. I'm like 50, 70, you know, points down, you know, and I'm blowing up my account right here. And then as soon as you do that, it shoots right back down. And that's because it was collecting your stop losses up here to send it back down. It needed to grab some more people to money to take the market down before it moved down. So that's why you want to look for something like this right here. That's what you want to look for. Even this area right here, this was a good break and retest right here. Oops. This was a good break and retest. And this even gave you a gap, you know. This candle broke. This candle pushed back up near the zone. It retest that zone. It closed right here, and then you take it down from there, either up here at the top, you're entering right here, or you entering at the base of the candle, and then you taking it down from there. This is a 79-point move. You got the gap. It didn't even fill yet, right? It just kept moving down. This would have been a trade you could have still been in from here. Like, that was beast, right? This, you can't even see this on the 1 hour right now. Let me go right. So that gap on the 4 hour, imagine taking this trade from that point, and then you're in this trade from here where you took the perfect break and retest entry, and you all the way down here on NJ. You 9,959.5 pips on NJ. Like, who does that on NJ? You know what I mean? Like, that's beast mode right there, right? But that is what you want to look for. Can you do a markup with the zone is on? Yeah, I showed that. That's awesome. Thank you for that calling for it. What about catching the sale? The second market open back up, catching the sale. The second the market opened back up, created a perfect M as it got exhausted at the top of my fibs. Mark 100% mark and continue to drop, seeing on 400 pips. What pair was this, Zed? This was on Go, or this was on Go, or some other pair, or US 30? US 30. Like I said, you know, hey, trade with fibs. Fibs don't, I got fibs on here. If you look over here in the corner, these are fib levels right here. I keep them on there, but I use it from a long-term perspective. I think this came from the daily. These fibs came from the daily, because like, I want to know from a daily perspective, where am I on the fibs? I do want to know that, right? So like, if I'm at a 50% retracement level on a daily, then heck yeah, I want to know, you know, where I am on that. Or like in this case, this move that I got this from, this move up, right? I'm gonna have to zoom out. I think this came from a weekly, right? Yeah, this came from a weekly, right? So I wanted to know, where was I within this move right here? Because I'm actually using my, I'll be honest, I am using my fibs because I want to try to get into a long-term play with US 30. So like, I'm gonna put in a couple small orders when I see another rejection counter, because right now, if you see this, we're sitting at a 236 level on this move right here. And if I can get a good entry with a small position that I can just leave in from this point, I want to try to take this back up to where we were when we were near the highs, right? I don't know when it's going to happen, but from a long-term perspective, that's what I'm looking at right now, because this move was the last impulse right here from this 2106, 21607 level, right? We got our impulse down. We got our move down, and you know, it's one of those things, like, we know that at some point there's going to be news to drive the market back up, even if it take a whole year, you know, even if it takes, you know, the rest of 2020 to regain at least half of this, you know. When they get a cure for coronavirus, you know, or you know, we get some kind of good market news, and it drives the market back up, like this 0% interest rate. Something will drive it back up, you know. So that's where you know, that's where I do have my fibs in place right now. So, yep, that's it. So I'm like in over here, just like today, like today could have been that opportunity. Like it's already pushing it back in opposite direction, but just not ready to say this is a long-term effect, you know, because we still got swings right now that are really, really heavy. Like you remember at one point us looking at US 30, we were looking at 100 pips a day or trying to get 50 to 30 to 50 pips a day off of US 30. But right now it's breaking zones and it's doing 500 to 600 pips per second, you know, and you can't even get into some of these moves because it's moving so fast. So for now, I'm kind of trading off of more so off of the zones and then off of what the news says, because right now the news is driving price so crazy right now. You can't really stick to just technicals on this. So like having fibs right now doesn't really hold, you know, even zones are getting blown through, right? So that was why my logic today was I got to hear what Trump say first before I enter the trade. So yeah, it was a lot of people that jumped in and sell, but we didn't know when Trump was going to get on, you know, and I, you know, once I saw that, I was like, nah, I know it's selling, but here's a zone right here. When they first mentioned it, it was up here, right? We already knew people were going to take profit up here, right? They said he was going to get on, it pushed down because a lot of people who had bought up right here, they knew that he was getting on, so they were closing out. That's like a lot of this push down came from people closing out their trade because all these people who had bought in down here knew that Trump could send the market wherever he wanted it to go, you know. So some people got in right here. I didn't, again, because I was looking at the 15-minute on this. I didn't get the good clean entry, right? Even on the 5-minute, this wasn't a clean entry, right? I could have got it on this retest right here, but I just didn't feel comfortable because at the same time as when I heard about the Trump news that he would speak at some point today. So I just didn't feel comfortable getting it until I start seeing this swing right here. And that's when I got in down here on this trade right here, and then up here on this little trade right here. So that was the logic behind that. And I didn't get a chance to get this move because I missed this on the conference call. But I still, like I said, this was $900 for this trade off of 3 different orders. And it could have been a lot more, you know, this could have been a whole lot more. From here to here, that would have been, I might not trade the rest of the month if I had to took this whole trade, but whatever, you know, it's all good. So, anybody got any more questions? Because that was what I wanted to kind of go over. Just going over markups and some entries, going over some of my trade. Oil, let's look at oil. All right, let's look at oil. Oil. Ooh, yikes. Let's look at it. No structure. No structure whatsoever. No structure. It's just like,
I don't really normally trade gold, but apparently it's like the all-time low right now.
gold?
I mean, not gold, oil. My
Oil,
bad.
yeah. Oh, of course, yeah. Oil is, oil is at all, not all time low, but it's at the Lowest it's been since the Gulf War.
2015 or 2016. I was looking at it the other day.
Yep. Yep. Let's look at monthly.
And there's also two gaps. There's a gap all the way up like at 53 area that never got filled.
Yep. So I need a little more structure right now. Like I need something a little more clean before I get into it, right? Like even it's just too all over the place. Like right now it's news carrying it. So it's not really giving you like a good clean area in there. But like if you wanted to take this, I guess you could trade this zone. It's already broken out from here, right? But this is the zone. Yeah, till like here. Maybe I say look for a retest. So you look for that ABC setup. It's already moved from here. And as far as the targets go, let me look at what they would be. So I would wait for a retest on this because it's already broke out from this zone right here. And this would be off of a retest. This would be my target one, where this wick is right here. So I would be looking for price to come back down to this area. And then TP1 would be right here. Let me see where I would see for TP2 and 3. Let me look, zoom out a little bit. Yeah, and it's gonna be hard to find because this is not. Yeah, let's see. So maybe here. And then best case right here. Those would be my TPs. All right, let's zoom back in. Yep, that look clean. So yeah, so this is what I would do as far as oil. I would like to see it push up and come back down, retest this zone again. And then from the zone, my first TP would lock in back to where this wick is, and then here at 38.05, and let's take this up a little more, 39.45. That's where I would be looking at it to do. But this is, like I said, this is news too. So all of this is kind of like coinciding with what's going on in the news. So before we get like a real move back up, what do we got to hear about? We got to hear something about with Saudi and Russia doing something with their oil supply. You know, we got to hear something about the tension between those two countries, or U.S. oil supplies kicking up, or something like that. We got to hear something that has to do with the demand of the oil demand increases. You know, we got to look for those kind of keywords and stuff like that. You know, because right now, because of what Saudi did, I don't know if y'all heard about it, but the what is he, the Sheikh, he locked up his brother, and who was actually the one in power, and then he did this oil play. Like it was like, I lock up my brother, then I'm about to lower the oil and be the like #1 producer. So that whole thing was crazy, you know. Like we might even hear some other stuff out about this later on. There might be a movie about this at some point, because like I ain't heard no Prince locking up his brother. Like this sound like some James Bond stuff, you know. But that's what you'll have to look for, you know. So and then if it comes back down into the zone, I would probably just sit out of it, you know, and if, or, you know, I showed you a couple ways you can enter in if it rejects it, but I don't see any examples on this right here too much, right? So let me show you an example of if I traded within this zone, what I would be looking for. So of course, if I'm trading within this zone, I am only going to do it from a smaller time frame. I'm going to look at the 5 minute to get these entries. If I want to trade in this zone, I would see, okay, rejection. I just rejected the zone. I got this bearish candle, sellers coming back in the market, some more sellers coming back in the market, some more sellers coming back in the market. I would use this area right here, right along here, to be where I would enter in if I was going to take this down into the zone, right? To try to trade from zone to zone. But again, it didn't really give you a clean entry. This would have been my entry over here to go down to at least here. This would have been like my TP1. I would have gotten stopped out, but I would have got stopped out in profit. So that would have been the only way I would have taken this inside of here. And if at this point, I'm looking at this more so for the upside, I would look at this more so upside right now, because this might even come back down into the zone and make this move right here. Don't really see it coming back down to these 30s and this 30 level or anything like that, but who knows, you know? If it does, you know, you either trading, you scalping into play down to the floor, you scalping into this move right here. This A, look at this A, B, C inside of the zone. You can still trade that ABC inside of the zone as well. You just got to look for where you would mark your A, B, C areas, right? Trade that same move down. Because basically, even when you're looking at a break and retest, you're looking at the market cycling through itself. So like this move right here is a cycle, right? You got a wave, 1, 2, 3, right here. Even in here, ABC move at some point, you know, you might not see it on this time frame, but you'll see it on the lower time frame. Even when you see these wicks, like if we took an ABC setup from right here, right? This is where it rejected, right? Let me show you. You see how we got this wick right here, right? This is our rejection, right? This is the lowest of this rejection, right? You either enter in at the top of this because you already kind of know that it's a likelihood that this pushes back down. We don't know how far, but if you took it from the top of this area, you look into your left and you seeing where you can trade this to at minimum. If you look to your left, this is that minimum where you can trade this to right here. And then the next level you want to look at, the minimum it can trade it to is right here after this level. And you would have got both of those, right? You want to stay in this trade, you still got this level right here within the zone, and you can at least get right here. You would have got that, right? You would have made it all the way back to the zone because you're looking at it from trading from an ABC setup from inside the zone. If we looked at this from a 5 minute, even the 15 minute will show you this probably, right? This that same area, right? Boxing in this area, boxing in this area on a lower time frame right here, and you trading the breakout again, but you're doing it from a lower time frame. So it gives you a little less risk because you're trading, you know, versus having a stop loss all the way up here. you only need your stop loss up here because this is the highest wick right here, most recent high. Your stop loss is above here. So in this case, you only, you know, if you're looking for like a bigger trade, you know, or sometimes some of the other TPs that we will get are pretty huge, you know, where it would be out here somewhere, you know, versus down here where your TP could be, and then you're taking a trade from here to get to here, you know. So that's the kind of things that you want to look for if you want to take a trade inside of the zone, which sometimes I do. In like this case, if it gets back down, you got opportunity, but you need to see it close. Like this would be where I would enter it in. If I was going to take this back inside of the zone, I would need to see price push down below this, then push back up, and then take it from here back down. That's the only way I would get this. But this one, you kind of missed this already. I mean, if you want to jump in, I would only look to trade it up to here. I wouldn't try to go any further, and because it could reject at this point. Like, remember, like that wicks tell you that sellers coming into the market. So I would not really jump in at the moment. I would need to see it come back down from here to here, then go up from there, right? And if it doesn't come back down, that's okay too, because if it doesn't come back down, that means that somewhere in between here, within all of this gap right here, we're going to create another zone, or we're going to react to another zone. And then at that point, you know, which based off of what this looks like, the next zone will likely be somewhere up here. And that means that once it reaches here, you'll likely get rejection, and then you trade the breakout, or you trade the scalp within inside of the zone until it breaks out to the high or breaks back down to the low. That's how you look at it. Can you got on late? Can you have a look at NAS? Can you please look at it and let me know what you think? NAS. NAS. Same thing as US 30. Same thing as US 30. I'm gonna go back to my US 30 chart, right? Because though it's different zones, it's the same thought, right? So I'll go ahead and do it. NAS, yeah. NAS zones here. Zones here, right? That's one. That's two. The one above. Hang on, 4 hours. My bad. Zones on the 4 hour, they still match up, right? I don't really need you, right? Here's 3 right here. And I'll leave you right here, and I'll even add you in between right here, right? That's where I'm trading from. Look at it on the 1 hour. This what it looked like on the 1 hour. Zoom out a little bit. Clean, right? Nice clean zones, right? Let me move you down just a little bit. Right here. Okay. Clean zones, right? So, like I said earlier, too much news is affecting price right now, right? And these zones are getting blown through. But the reason why I picked these areas is because it's where we got wick rejection, right? Or we got the price just immediately moving into another direction from these areas, right? So since we don't have clean market structure right now, we got to use where we see price rejecting, where we see price turning around. So, because it's so much manipulation happening right now. So we can't look at the basic market structure on a pairs like US 30 and NAS 100 right now. But like this move that happened right here, this was the gap down from the coronavirus stuff this weekend. Blew through every zone, everything got blown through, right? This was the circuit breaker right here. This was the market circuit breaking, and it pushed the market back up, blew through all these zones. Like these zones should have been respected, at some point they weren't. And now it's trying to build some kind of structure, but that might not be the case. So you kind of got to trade NAS, US 30, gold. My YouTube channel, let me see, where is it? I'll put my YouTube and my YouTube and my IG up right quick. Hold on. YouTube channel is here. YouTube channel is in the chat right now. YouTube channel is in the chat. IG is in the chat. That's pretty much how you're gonna get me. Telegram, same thing as IG. Telegram, same thing as IG. And even, so Telegram, Instagram, IG, all of those are pretty much the same. I kind of I did that so I don't have to like think about all this kind of stuff. That's IG 32. Let's pick another color. Oops, don't want to sell this by mistake. IG, right there. Right there, that's IG. And that's Telegram. That's my YouTube channel. I think it's the same thing, Corey Forex. I think it's the same thing. And then, like I was saying though, just with the way that the news is manipulating the market right now and the way that the news is driving the market, you have to trade it kind of focus more so on the news versus the zones and the market structure. Because right now there's really no market structure. There's really no consistency. There's no zones holding up. The price action, candlestick patterns are just out of the window right now. You can look at the line chart and see like we got kind of we got some double bottoms here. We got some double bottoms here. We got kind of a head and shoulder almost right here, going right here. It kind of broke, but that's a clean head and shoulder. Over here, kind of here, little off, but there's your head and shoulder. Me personally, I'm gonna look to trade this based off of what we get news on. We just recently, some things I would listen out for. Trump lowered the interest rate. He mentioned that he will likely set the interest rate at 0% for the rest of the year, which that is a bullish news release. And that would imply that the market should buy. We don't know if that's the case because we have multiple things happening at one time. We have oil, the issue with oil. We have the already pre-existing issues with the economy. And prior to the oil prior to coronavirus, we'd already been mentioning recession, right? They'd already been talking about us possibly going into a recession. And you know, with all that kind of stuff, even before that, the numbers for retail numbers for Christmas holidays, those numbers weren't really that good. So we already had reasons to consider that we might be going into a recession. You add in all these news that's going on, and it's basically pushing us into it, you know. So you gotta take some drastic measures as the feds, you know, and as the president, you gotta take some drastic measures. So him lowering the interest rate to 0% for the rest of the year, that's that drastic measure. But then after you do that, like what else can you do at that point? You know, what else can you do to stop the market from going wherever direction it's going? Because you've already tried to lower the interest rate a week before. They did emergency interest rate. They lowered it. They did an emergency interest rate cut the other day, you know, and it didn't really do anything, you know, didn't budge. Like it actually sold on the interest rate cut. So that kind of tell you where the sentiment is. Like nobody want to hear you cutting the interest rate. We want to hear you got a cure for corona. We want to hear that you're going to do something about oil, and we want to know that the economic numbers are on point. And until they kind of balance all that out, then we don't really have a clear idea of what's going to happen with the market. So, and so Reese, you know, he also mentioned he would cut the interest rate. Also mentioned that there would be he would be considering some stimulus package, and that's got to go through Congress. You know, that's got to go through Congress. That's got to go through those guys before it get passed. And you know that to get those stimulus packages approved, he can't just veto that. So this isn't something that can be put into effect, you know, next week, you know. So that could go into the summer, you know. And yeah, so for me, I'm looking out for news. I'll focus on the zones to kind of take the entries, you know. But right now, I am looking for some buy opportunities, and I'm gonna look for them off of these zones, of course, somewhere around here, because right now we pushing down. We already got one swing. We got our rejection. We got our bottom over here. We got our first swing low right here. Yeah, we got our first swing high right here. I'm sorry, here to confirm we could possibly be in an up move, right? So I'm looking for some rejection down here near this zone. This will look the same way for US 30 for me. If we see we got our first, we got our bottom over here. We got our swing low right here, swing high right here. And then now I'm going to be looking for some rejection around this area. And then, you know, not only do we got this zone right here, but we also got this wick, these wicks right here, confirming that it could likely reject from here right here. So that's what I'm going to be looking for. But I'm not going to get into any trades until I hear what the news is going to be for the rest of it, for the opening, you know. So, and if I do get in trades from here, my TPs on here would be to try to reject from here to here and here. Those are my TPs, because the weight of this movement, we could hit this TP for 700 pips in no time. It went 1,000 pips down today. It went 1,100 in the opposite direction. So you just kind of got to play it. So, but I won't look for any trades to enter until I see rejection at some point. So I got to see something similar to this at some point before I enter, you know. I need to see that long wick pierce and reject. Then I need to see a follow-up candle like this that's bullish to confirm people are buying again. And then I can enter on something like this or like that. That's what I'm looking for. We already got 3 candles rejecting right here. Maybe it rejects off of this zone, right? Maybe it rejects off of this one. And this the way that these candles are rejecting and pushing back up, this is validating this area right here. So maybe we get a push up from here, you know, that would be nice. That would be cool. If I don't get in on this, I'm all right, because I'll look for the next swing, right? I'm looking for, let me go to MetaTrader. I mean, Trading View. And let me open up US 30. I like this one. This one's cleaner right now. So this is what it's looking like right now. We're in a cycle, right? We got the first wave here, second, third, right here. And now we're doing this. 1, 2. Hold on. Too far out right now. Let me go back right here. Looking at this move right here. Something similar to this. And then push up from here. Something similar to this. This is what we're looking for. This third point. So we already made 0 to 1. Now we're looking at, we just made 1 to 2. We're in the middle of making 2 to 3 right here. We're looking to get in on our 3 and take it to 4. That's what I'll be looking for. That's exactly what I'll be looking for. And my TPs along the way for this move will be here and here and finally up here. And then I'll be out. I'll send you this too. Send you that too. Even my even my Trading View. If you got a Trading View account, you can follow me on Trading View. Sometimes I post my Trading View setups as well. It's the same thing, Corey Forex. So if you want to follow me on that, you can go ahead and do that too. And let me show you something else, like last thing, all right? Last thing, and then I'm about to get ready to go. Use your Trading View accounts, man. Like the Trading View platform is so dope. Like I don't use it a lot as often, but when I was using it a lot, like I can go back and see all my stuff, right? Everything that I traded. I used to even, jot down my thoughts after I take the trade or before I take the trade, just go through and like explain what I was looking for. This is like my journal right here, digital journal, and I can just see like, what I'm looking for, I can go back and like this is what happened when I took the trade at Brexit, when Brexit news came out. I can go back and see exactly what happened, and I can go to the point where, all right, look, my TPs hit, all that TPs hit, you know what I'm saying? I can see all of that information, and like I even trade stocks too, so I can look at the stuff that I was trading for the stocks too. So all this good information, like, that I have because I'm using my account like I'm supposed to, And if you have, and basically what you would do is you would go to your chart, right? And if you want to publish it, you publish it, right? You put down your information, put a little description, your analysis or whatever you want to put, publish it, and then it'll be available for you to review it from over here, right? So, yep, that's a good thing. Like everything that I just went over, I could go back, add this, those things to the chart, if I wanted to, put all my TPs and stuff and like publish it for you, you know, so you can see like everything, you know, and make it available so you can go back and look at it. So remember that as well. But I'm done. I gotta go eat and eat dinner and all that good stuff. My wife probably looking at me like I'm crazy because I ain't paying her no attention today. She'll be all right because she probably working too. So hope y'all got some information, good information out of this. Hit me up on all the platforms I mentioned. And then, you know, if you got any questions, you can hit me up in Telegram. I'm about to unmute everybody. So I want to hear everybody say bye, good night, whatever y'all gonna say. All right,
Good
y'all.
night, Corey.
Appreciate you, fam.
Where's that?
Thanks, Corey. You're the best.
All right, y'all.
Set me on
Blessing,
Instagram.
blessing, blessing.
Have a good night.
How about you tell that mom?